Bitcoin, especially this year, has succumbed to the significant deterioration in most asset classes.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of ARK Invest, Cathie Wood, on the crash in the stock and crypto markets and what effect it's having on Bitcoin. Wood goes over a scenario in which Bitcoin actually doubles in price, which would put it right around the $40,000 range. She says that she's surprised at how badly Bitcoin has performed in the current environment, and even though we're in a recessionary climate, Cathie says that we haven't seen the worst of it. She believes that the current trajectory we're seeing now is only a precursor of what's to come. Let's check out this interview with Cathie Wood as she goes over her financial outlook for Bitcoin as well as the crypto market and what impact rising interest rates will have. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think a lot of people have been surprised at how badly Bitcoin has done in this environment. But what has happened, especially since we first started doing our research, a lot more investors have become involved with it, traditional and hedge fund investors. And so in a risk-off environment, which is what inflation and higher interest rates has meant over the last year and a half, in a risk-off environment, Bitcoin, especially this year, has succumbed to the significant deterioration in most asset classes. I mean, this is the worst bond market, believe it or not, since 1788, more than 200 years ago. We've never been in this bad a bond market, certainly through the first half of the year. The stock market, worst through the first half since 1970. And Bitcoin was doing well until last November. It almost hit 70,000. Now it's down to the low 20s. And yes, our confidence has increased, believe it or not, in our price target. One of the reasons is the partnership between BlackRock and Coinbase. We're seeing the traditional investment firms really being pulled by their clients into supporting or providing an infrastructure for institutional investing in the space. And by our estimates alone, if institutional investors put 2.5% into Bitcoin, that would more than double the price right now.
Wood feels that if everyone followed her method, it would dramatically increase the value of Bitcoin. The only issue is there is a large illiquid supply of people who hold Bitcoin and never sell. This restricts the flow of the digital commerce space, and emerging markets are already being terrorized by inflation, which is collapsing purchasing power. With only 3 million Bitcoin in illiquid supply, Cathie believes this could drive the price even higher than double what it is now.
We think that that's just one use case, though. If you look at emerging markets, which are being terrorized by inflation right now, talk about collapsing purchasing power, while 70,000 to the low 20s is a very big correction. What it does not change is the fact that Bitcoin is mathematically metered to top out at 21 million units. And if you look at most of the supply, we're at 18.5 million units, I think, are out there right now at Bitcoin. 14 million of those are illiquid. People hold on to Bitcoin. So if we now have this institutional investor base moving more aggressively into Bitcoin, at the margin, the supply relative to demand, there's, I think, only 3 million in liquid supply. At the margin, I think it could drive the price up much more than the doubling I've said, just because of that imbalance. So our confidence has increased in that forecast for 2030. Best investment is Bitcoin. I remember when we first did our work on Bitcoin with Art Laffer, my former professor, I remember saying that it was $250 at the time. And we were doing this white paper. Chris Berniski was our analyst at the time. And when we got through the white paper with Art, I looked at him and I said, oh my gosh, it can serve the 3 roles of money. It could. It's already serving as a store of value, but how big could this be, Art? And he said, well, How big is the US monetary base? This is the first global monetary system, rules-based, in history. It was $4.5 trillion then. This was $250, a $6 billion market cap, to 4.5 trillion as the potential TAM. Today, that would be $8.5 trillion. And I went out, I became the guinea pig for it, for ARC, right before, to make sure all the plumbing worked with GBTC at the time, and put my own personal money, and to the point where the analyst was saying, like, oh, I feel so responsible, this could go to zero. And so it's been the best investment. And, you know, I put down a pretty good chunk of change there. And then, of course, ARC followed very quickly at around the same price. The worst investment, probably, I felt very responsible at the time. I was at Jennison Associates. And I was that adventurous analyst who was willing to go out and look at Mexican stocks and, you know, Chinese stocks. And the worst investment, we had loaded up on Mexican stocks. I was the prime analyst. And, you know, I did not believe that Mexico would devalue, that because the leadership was saying they would never revalue. Well, we didn't take any of the risk off as that risk was building. And that's the worst mistake I've made, I think, in my career. And it made the difference at Jennison between outperforming the big benchmarks that year and underperforming. We underperformed. So I felt very responsible. You know, there are a lot of, in the traditional asset management world, there are a lot of what I call inductive thinkers. They take company information and try and put a picture together. We need both. We need deductive thinkers as a starting point. If they can be both, fantastic. But the deductive thinkers are really good at figuring out how to size markets and to figure out where the unit economics are going to be. So that's the second screen. And then if the analyst or prospective analyst gets through our director of research, then the analyst usually comes to me. And I am looking for, I don't know, have you heard of, you know, the book Blink? Blink is where there are a lot of subliminal things that you can pick up in an interview. I think that's my role. And it's also, again, about the cultural fit. You know, the body language, the appetite for adventure and that sort of thing, the ability to withstand criticism, which of course we get a lot of that. So those are the sorts of questions I'm asking, because by the time they get to me, we know they're a good cultural fit. We know they have powerful intellect. And so there are just a few more things we have to know about them.
Wood says there is currently no way to tell if we're exiting the bear market or if we're only in a trading range. ARK Invest has utilized the strategy to invest in innovation-based ideas like Bitcoin, Zoom, and Tesla. Cathie also analyzes the current market's record high inflation, rising volatility, as well as the chances of a global recession in 2022. While we wait to see what the Fed will do next, there are institutions wanting to participate in the crypto space, but they have no efficient way to do so. She says the tipping point from retail to institutional adoption could be much lower, and her price target of $1 million per Bitcoin by 2030 is still very much the path she sees Bitcoin on. We'll be keeping an eye on this. What do you think of Cathie Wood's prediction for Bitcoin and the future of the crypto industry? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.